Welcome to Everything Money. If you are a new investor, young or old, and you feel lost out there on how to start investing, we are here for you. In this video, you will learn the simple steps to start investing in the stock market and what common mistakes people do, what to avoid. We want to show you a couple guys who manage over $100 million in real estate, multiple businesses, and stocks, get their mindset on how a beginning investor, where we can put their money, asset allocation, and like I said, pitfalls you want to stay away from in the years to come. We're going to show you our software and show you how you can utilize it to make better investing decisions for a lifetime. We are teaching a process and we'll show it to you right now. I give to you, Paul Gabriel.
You gift to me or give to you?
Both.
I think it's both too.
Yes.
Guys, can you follow us on our new Everything Money Investing Instagram account and also follow us personally? So, the great news is you're going to make mistakes. This is absolutely going to happen. The goal is, as Charlie Munger says, go out there, see what other people did as a mistake, and learn from that. Unfortunately, most of the mistakes that are made are learned best when you experience them yourself, right?
Yeah. So
I'm going to talk about the ETF and stock world, and Mo will talk about the trading world, because Mo does a lot of trading. I do the ETF. I do the individual stocks. First off, if you like the idea of picking individual stocks, don't apply too much of your portfolio to it. 90% of your portfolio, in my opinion, should be ETFs, market-based ETFs, low cost through Vanguard and other companies, Spider, buy low-cost ETFs and just watch the market go up. Because over your lifetime, it is very likely that over a 30, 40-year period of time, stocks will be much higher as time goes on. Here's what happens with stocks over long periods of time. The stock market goes like this. Here is where prices, so I should say this. The stock market values go like this. Here's where prices go. Your goal is to buy every single month, every single year, equal amounts, every single time. Don't ever think about it.
This is dollar cost averaging.
This is dollar cost averaging.
DCA in.
What you're doing here is, on average, you're paying this. Sometimes you're overpaying, sometimes you're underpaying. Over time, you're paying about the average.
And folks, this is as simple as getting on Schwab, getting on Fidelity, getting on Robinhood, and buying an ETF like SPY or VOO. We have other videos about those. Keep going, Paul.
And set your bank account to automatically transfer the same amount of money every single month. Take it out of your hands. You know, one of my good friends, a kid named Daniel, is 23 years old. I told him start with $250 a month. He's a runner. He's in college. He's finishing up college, and he's a runner at a restaurant in Dallas. Every single month, $250 comes out of his account, and all of a sudden he opens his account the other day. He's like, oh, wow, I've got $8,000 in there. I'm like, oh, great, good for you. But he was surprised because he never noticed the $250 a month coming out of his account. In fact, we did $62.50 per week. Are you really going to notice $62.50 per week? Really? Are you going to? No. Even if you have to save $2,000 a month, you're not going to notice. Split it up per day, $70 a day. If you have the luxury of making $100,000 a year, are you going to notice $70 a day? No, you're not. Especially take it out of your paycheck to your 401k. You're not going to notice it. Pay yourself first. That's what you're doing. Dollar cost average. That is your goal. That's the only thing you ever do in investing. You're going to do great.
You're talking about 100% of your money into an ETF.
If that's all you ever do is put 100% of your money in a low-cost ETF like this over and over and over again, you will make a lot of money.
Don't get confused with a mutual fund, right, Paul? I mean,
don't get confused with a high-expense mutual fund. 82% of mutual funds do not beat the market on a year-to-year basis, so imagine how hard it is over a 10-year basis. You know what does match the market? A low-cost ETF essentially matches the market. Why try to fight them? Just match them. That is the very first thing you should do. The very first mistake, though, that most investors make is when stocks go here and they see their 401k and their net worth go down, they start selling.
Yep.
That's the first. I remember years ago, back in 2006 or 7, friends of mine were getting started in savings. They said, Paul, how should we do it? I said, okay, let me ask you guys a question. If stocks fell in half, what would you do? And I remember the wife looking at her husband and saying, well, we'd buy more, right? I said, exactly. She goes, yeah. I said, yeah, because they're on sale. What's your favorite thing in the world to buy?
Magic cards for me.
Okay. Mine are watches.
Watches, yes.
If the price of Rolexes fell by 80% tomorrow, I would be buying a lot of Rolexes.
In fact, there's that funny story where a local jeweler was like slashing prices on Rolexes. Didn't you buy 6 or 7 of them?
Yes. So there was a local jewelry store that lost its Rolex dealer, and they literally were offering like 40% discount. I went in there, what if I buy 7? They're like, oh, we'll give you 50, 55. I go, great, I'll be right back. That's what I did. That's exactly what I didn't worry about. Like, oh my God, why is this jeweler slashing the prices? Does that mean Rolex prices? I just like the watches. Same thing with investments. Same exact thing with investments. That same couple I'm talking about, a year and a half later, the market crashed. They sold everything. Market didn't even fall 50%. It fell 37%. They sold everything. Every single, no, it did fall 50%. They sold everything. We couldn't stand seeing it go to zero was the exact comment the wife made to me. I couldn't stand watching it go to zero.
If the stock market goes to zero, you have a lot more problems in the world than your retirement.
That's exactly what I said to them. If the stock market goes to zero, we have Armageddon. It's whoever has the most guns is going to win. The stock market. The other thing is they were 26 at the time.
Wow.
So they had a lot of potential. I mean, they don't have, yeah.
So wouldn't phase 2 now be, Paul, that I'm a little more privy to the jive here. Hip to the jive. Yeah, so I want to buy these amazing stocks I see on TV, Jim Cramer, I see on TikTok. Let's get after it and start making some money.
Okay. So the next thing is, whenever you do, this what I just described there, dollar cost averaging is a process. Okay? The first thing you need is a process that works over time. Value investing works over long periods of time. The hard part about value investing is what?
Patience?
Patience and doing what everybody is not doing.
Yes, that stinks. It just feels like crap at times, Paul.
Yes, because everybody has FOMO, fear of missing out.
Yep, that's me. Tesla, Amazon, Bitcoin.
I have zero FOMO. I've been very fortunate to have brainwashed myself into believing that everybody out there is stupid. So if everybody's out there is doing one thing, it's probably the wrong. I always joke and say my belief is so strict about people being stupid. I actually don't believe the sky is blue because everybody believes the sky is blue. So I'm like, we must be getting something wrong. That's always my joke. Clearly, I look at the sky and go, that is blue. But the joke is everybody thinks it, therefore everybody tends to be wrong. Therefore, it must not be true. You've got to believe that to do individual stocks. You have to have that patience and ability to be wrong. I don't own Tesla. I don't own Amazon. I don't even own Apple because I think it's too expensive. Apple. I think it's too expensive. I get excited when somebody goes, that's a piece of crap company. Really, which one is it? Let me hear. Whenever I hear a real estate person say, oh, you don't want to buy there, guess what's the first thing I do? Pick up the phone and go, hey, what's for sale over there? That's literally what I do. In 2009, everybody's like, aren't you scared buying homes? No, I was buying things hand over fist. Isn't it weird? So everybody calls me like a perma bear, yet when times are bad, I'm the one buying.
Yeah.
That's the most important part. Do not sell when things are bad. And when it comes to individual stocks, you have to be able to not follow the market. Use your friends as a way of gauging where you should be and doing the opposite of them is my point. If your friends are all into crypto, like Amazon, all these stocks, they have no process for it. Guys, every company in the long run is a weighing machine. In the short run, it's a voting machine. The most popular stocks will win. But in the long run, what matters? What is going to drive your net worth? Your net worth is the same as the company market value.
I love this. Yeah, it's like, how much do I make? How much do I spend and owe?
And how much do you save?
How many kids I have? My shares outstanding. How much money do I got to give to them?
I didn't even think about that. That's a good point.
Right? I mean, if I keep divvying up the pie.
Yep. So that's what matters. I look at it going, okay, if I'm going to sit here and look at my net worth, it's no different than a company. You might sit there and say, well, no, I get my money. Well, same thing in the company, just in a roundabout way. Either they pay down in dividends, buy back shares, pay down debt. Either way, you're buying a piece of a company. Don't fall for the mistake that you're buying a ticker symbol. You're not. You're buying a company. You're buying a cash flowing business. And the less you pay for that cash flow, the better you'll do. The less you pay for a future stream of income, the better you'll do. If I told you $1, $2, $3, $4, and $5. This is the next 5 years of a company. What would you pay me for this $15 stream of income? Would you pay me $20?
No, that's silly.
Guess what? That's what you're doing with Tesla. You're paying me $20 for $15 in the future. Would you pay me $6?
That sounds good.
That's what you're doing with Intel, in my opinion, and Alibaba and Walgreens. You're paying much less for that $15 stream. You have to decide, are you this or are you this? This one, if you do it across 30 or 40 companies, will make you a lot of money. This one will cause you to go broke. How do I know this? Everybody's doing this one. That's why it's $20. Nobody's doing this one. That's why it's $6. That's it. Mo, talk about chart reading, because that's a lot different. And I know a lot of people who've tried it with no process. It doesn't work out.
I would say so. We have had people, and they have joined Mo and the Business Nation, our community. We'll get to that here in a minute about our software in our community, but have gone, Mo, from complete hermits when it comes to investing to literally like months later. I almost consider experts in trading following your guidance. It's wild. I'm now asking them for advice because they've just lapped me in terms of the knowledge you can give to them.
So there's a way to make money on these ridiculous stocks. This is Rivian. This is the chart for Rivian. Paul, look at this. Isn't it cool?
Oh my God.
That's the chart for Rivian. There's nothing there. There's nothing that we can base this off of to say that this thing is going to go up here or down here or stay somewhere in the middle. So for me, this is a move over to the 15-minute chart. This is a 15-minute chart. So each of these blacked out periods is 1 day, and that opens up those candles that I just showed you. So this is where you come and make crazy money on these stocks when you get your stochastic is over 80% moving up. And I'm probably speaking Chinese to you, but these rules you will learn if you come and join me in the Bid and Ask Nation. There's just so many. Seth, I just look at this. Like, there is ways to make money on Lucid and Rivian and stuff, and I talk about them to the Bid and Ask Nation. I'm like, guys, this is ridiculous what's happening. But if that's not what you want to do and you want to look at longer term stuff, let's say you just want to buy the S&P 500 and trade it long term. This is your chart for the S&P 500. We have rules of how to enter and exit positions. This moved through here at the sweet spot, and it just has been going sideways and for a very long time as the stock price keeps climbing. This is a perfect trend that you would get into and hold on to for something very long term. If you're interested in doing things that are a little bit quicker, let's go over here and let's type in Apple, for example. You can come over here, and this looks like a trend that's setting up beautifully for what's called a swing trade. That's a 1 to 5 day trade. If you're interested in sitting on your computer and every so often executing ththese trades, look what you have here. A stock that's coming up through the sweet spot right now. It's building up some volume. It's about to create an engulfing candlestick. I'm looking at this one tomorrow for the Employed Trader series. But these are ways that you can make money from 3 different perspectives that a lot of people talk about in this market, but they don't have a process and they don't have rules to follow that they repeat over and over again. And that is why you will do well using charts.
If this is starting to make sense to you, I'd love to show you our software, what we provide to you. This is a mechanism for you to gain control of your investments. Instead of just randomly Googling stuff, we can show you the financials of a company, for example, and walk you through our process of investing. Go ahead, Paul.
So we created the software because our original subscribers wanted to be able to do their own research and analysis without waiting for us to make more videos. So we created the software just for them. What's included is everything you saw here, including our amazing stock analyzer tool. You get 30 years of financial data, access to Seth, Mo, and I. You get exclusive daily content, 2 or 3 videos per day sent to you only through our software and our mobile app. This software back here is on the App Store and Android, so you can use it on the go. Everything there is included. All the extras, retirement calculator, real estate calculator, everything here is all going to be included in your subscription. But most importantly, if you feel alone out there, which a lot of our subscribers do, they joined our community with over 6,000 people, and now they can talk to everyone around the world 24 hours a day about their own investment ideas to bounce things off each other, talk about things. You're no longer alone in your own island. You can have these conversations with everybody. This is all available for only 90 cents per day. This is a no-brainer, 90 cents per day. If you're just able to either increase your returns by 1% or decrease your losses by 1%, this could lead to hundreds of thousands, if not millions of dollars a year. And you can also fire your financial planner, saving hundreds of thousands of dollars in your lifetime. So sign up, everythingmoney.com or Patreon. Either one gets you access within minutes. The benefit of everythingmoney.com is we do not charge sales tax yet because of our size. So sign up, 90 cents a day, less than a cup of coffee, no brainer. Make the best decision if you are serious about your financial future.
That's our take. If you're new, we welcome you to our channel. We have over 1,000 videos. We welcome you to our community. Start saving now and avoid overpaying. We'll teach you both processes moving forward. So fondle a thumbs up. Thanks for watching. We'll see you next video.